So, hello and welcome. I'm Gina Clark. I'm the editor-in-chief of the FinTech Times. I'm joined today by Nigel Verdon, who's the co-founder and CEO of Railsbank. So, welcome, Nigel, to this virtual setup that we've got here today.
Hi, Gina. Many thanks for the invitation, and delighted to meet you for the first time as well in video anyway.
Yes, I think we're all meeting virtually these days, aren't we? It's an interesting concept.
Yeah.
How has Railsbank found what's been going on since March, different ways of working? How are you coping with it?
Sure. We first of all, when we sent the whole company home, we've got people in London, we've got teams in Lithuania, in Sri Lanka, in Vietnam, and Singapore. We sent everybody to work from home, and the good thing is no customers realised we'd done that, which is because we're very much a digital native company, cloud native, all our processes, etc. So that was good, and the learning since then is we've been doing some surveys of the team and everything. They don't coming back to the office isn't going to be the normal going forward. There are some people who definitely need an office who are in shared accommodation. One colleague has 4 kids in a 2-bedroom apartment, and one says, "I'll kill my husband if I stay at home any longer." So for relationship purposes, I think, but more seriously, I think the office will take on a different, whether it's form or function. And I think we'd be more community centre is one way of looking at it, and then do we have, instead of an office manager type thing, do we have community managers run the Railsbank community? So we are our own WeWork, as you might say. So that's what we're looking at now, and then investing in standard kits. So when you're working from home, you've actually got a proper chair, you've got a proper screen, you've got one of these Jabra speakerphones because they're super clear and they work. Gaming headphones, because they're the best things people can wear all day long, because people in the gaming industry wear those. So it's been looking at all those and seeing how we get the right environment for everybody. But I think everybody coming to the office is a thing of the past on it.
Well, it's really what you're saying about the customers noticing is really interesting, because obviously kind of remote working for us is going to come through to a key trend to customers in sort of over the next few years. What else are you looking at in terms of key trends at the moment for consumers?
Key trends, we don't really deal with consumers directly. Our customers deal with consumers on that. But I think there's a high level of adoption and pressure now on digital product, and there's an understanding of products that consumers want, whether consumers are a consumer or an SME, have suddenly also realised that their traditional suppliers aren't digital. They've just basically digitized an analog process. So that demand of somebody experiencing a Monzo is fundamentally different from Barclays. It may be an app, it's an app, but they know how to engage in a digital native manner. And we've seen a lot in Southeast Asia for onboarding and other things where it has to be in paper. Although tomorrow I've got to go and have a notarized power of attorney, and that shouldn't have to do that these days. So I think there'll be more demanding and understanding of consumers and SMEs of digital products. An interesting other trend is, and this is where the banks will still play a major role in finance in the future, is people's deposits have gone to places of safety over COVID, HSBC, Barclays, JP Morgan, others in the States. And that is a trend I think will always continue, is while Revolut and Monzo are phenomenal products, sometimes Barclays has been around a few hundred years, is where your money ends up because it's Barclays. I think if we can get the system to work where your money and your deposits can be in Barclays, but your experience can be through a Monzo or others, or whatever sort of tribal app that's becoming quite tribal, that is a thing of better place, because the economics then work for Barclays, because for consumer $350 acquisition, $250 lifetime value without a loan. So they can probably acquire through Monzo or others at $10 deposit. They get deposits to go into loans. They don't lose money on all these non-lending type customers. So Barclays should be happy, their cost income ratio should be happy, and the shareholders should be happier. The regulators will be happier too. And Monzo's got a place of safety, so you can be the first point of call, and then Barclays can upsell a mortgage, because Monzo's never going to be in the mortgage business. It's long-term 30-year debt. I think. So we may be at a precipice now of going into a new way of finance, which primarily driven by the consumer and the fintech industry, to be honest.
That's really interesting, actually. So, I mean, I think in one respect, maybe COVID has sped up where we were going eventually. I think the tricky thing has been regulation. And I know you've had lots of thoughts on that. And where do you sort of see regulation fitting in as we embark on this new kind of tryways?
Yeah, I think Wirecard has demonstrated that one size fits all regulation, like the e-money license and things, isn't appropriate. We have to have a sort of a platform regulation based on e-money, perhaps, or based on banking, or banking non-lending, which essentially e-money is. For people like Railsbank ourselves, like Wirecard, like others in our industry. Because our industry doesn't actually need a balance sheet, therefore doesn't need a banking license. We're like clearing businesses more than anything. And so I think regulation needs to change to support us. And I think there needs to be regulation like they have in Luxembourg and Singapore for material outsources of your business. So if, say, we have 26 neobanks running on us at the moment, but so they're dependent on us. And I think we had regulation that showed step-in rights, living will, all the stuff you have in a bank. That would create a more orderly market, and the FCA wouldn't have had to step in as they did. Quite rightly, they stepped in on that. There's a whole lot of reasons behind the scenes to cause disruption. If something goes wrong, it can be shut down in an orderly manner and not impact consumers, and that's the most important thing in SMEs, because they were the people who suffered most from this. Absolutely. And so, yeah, I think that regulation does need to change to grow up with that. And some of the client safeguarding side of things, which is primarily the reason the FCA stepped in, was to ensure that if they did go into liquidation, that there was no commingling of funds, which would have triggered the liquidator being able to access the assets, and then also getting assets from Germany and other banks who had credit exposure to Wirecard AG and get that money back in the UK, for example. So there is also legislation, I think, of safeguarding needs to be grown up to look like the investment industry, which has got a thing called CAS. It's the client funds regulation that you're using sort of for any investment. Well, they should apply something like that under trust law into our industry because it works. Our one, it really doesn't particularly work hugely well at the moment.
So no, I think there's plenty of sort of innovation available in regulation looking up. And what about innovators in the space at the minute? Are you, I mean, apart from Railsbank, of course, are you looking at anyone and thinking they're doing a really good job right now?
Yeah, there's some interesting ones in, say, in the US, going to like credit as a service, and we've just launched that in the US ourselves. There's quite a lot of innovative companies in the data world still. And I think data is still a long way to go in terms of accessibility of data, bringing massive data sets together, like taking Visa and MasterCard ourselves and everything, and how you apply that in visualization tools, which I think are version 1.0 of it. So even something like Looker is a great tool, but I think it's still got a lot more innovation to go on that. So data, there's a ton of interesting companies in data world. Credit as a service is interesting. There's a ton of neobanks and others becoming neobanks because they've massively innovated about a real value prop to somebody like Plum. Here's your investment. I'll look after your money, and then you've got a right to become a neobank without all the CAC, customer acquisition costs, that are normally underwritten by venture capital because they've already got the customer. So there's some super interesting people there. Wage Stream's another one that's really interesting.
Okay.
The wage advancing. So with a social mind. So Wonga just totally got people into death spiral of compound interest. So negative impact of people's lives. Which is why regulators stepped in and stuff. And Wage Stream knows that, like, I think it's £1.75 a wage advance, and there you go. And they're massively underwritten. You've got the credit risk underwritten by the employer. So it's technology taking it ahead and for good human cause. On that.
Excellent.
There's a lot more of those.
Brilliant. And I guess as a final question, so we're here today at PAY360, this new virtual events. How do you kind of see that going forward? So you getting excited about virtual events? Is there anything we can do to kind of make it more? Sure.
PAY360, yeah, I remember PAY360 turning up and walking around it and stuff. And one thing's wonderful is you don't have to get on the tube or get on DLR or anything else like that. Go to an event. You can just be it from your study. You can do it from the bar if you really wanted to.
Sure.
If you see what I mean. So I think these virtual events are good in terms of content, because it's very selective content, so you can access content quickly. And I think from an event organizer, you've got massive audiences now. Open Banking Excellence, for example, used to, I think they had about a cap on about 350 people because the venue they used, Equinix's venue. Now they've got audiences of 5,000-6,000 and global audiences, and that's just happened since COVID. And so something like PAY360, I think, is a massive opportunity to go international without all that cost of international. But one thing I do miss is meeting your buddies over a beer or lunch or something, just to catch up. I love the speakers lounges because you again catch up with your buddies there. So, and it's just not the same on video in some ways. So almost PAY360 or something should be a meeting point somewhere, a community centre, as you might say, like we had the view on the offices, and then content you can access anywhere.
Yeah.
If you want to go and meet people, say, yeah, I'll be at the community centre here and set up a bar and bring people together there.
Sounds like a good compromise. Either that or we Uber or have a beer in front of us on the afternoon. Things we could do with technology. That's brilliant, Nigel. Thank you so much for joining me, and have a great time with PAY360.
Thank you so much, and good luck.